Ford stock dropped by around 14% in 2016, barely climbed 3% in 2017, and already this year, they're down another 20% in 2018. And with a PE ratio as low as 5.9, but actually a higher forward ratio at above 7, several viewers have been asking me, is Ford a value stock or is it a value trap? Very good question. Let's find out. What's up, everybody? My name is Ale. Welcome to my world of stocks. Now, to answer this question, we're going to be taking a look at Ford stock, their income statement, their balance sheet, their overall business, and the different ways that they plan on turning that business around. And then we'll end the video with my thoughts and overall conclusion on everything. Now, at the time of this recording, Ford stock was trading at less than $10 per share with a market cap just under $40 billion and a very nice trailing PE of less than 6, but a forward PE that does get a little higher than that at above 7. So a couple of quick thoughts on that. Now, the fact that Ford has such a ridiculously low PE would lead many investors to assume that their stock is undervalued, but let's keep digging a little deeper. Now, their forward PE is actually higher, but when you look at the auto industry, it's actually much lower than the auto industry. In fact, according to CSImarket.com, the PE ratio for the first quarter of this year was as high as 22, and even looking at the trailing PE, according to NYU.com, it was still as high as 17. So Ford's is actually much lower than that. So Ford's current valuation is actually looking pretty good, but the fact that their forward PE is climbing, that does raise some concerns about future growth and the direction that their business is headed. So for that, we'll turn to simplywallstreet.com and take a look at Ford's future growth. And here we see that Ford's annual earnings growth rate is about 1/3 of the auto industry and half of the market in general, and the revenue looks even worse, showing a negative rate. And while Ford does have some very low PB, PS, and PEG ratios, their future cash flow is projected at $3 per share, while they currently trade for just a little under $10 per share. So that leads to them looking a bit overvalued when looking at that metric. So to summarize, just by looking at their share price, their performance, and a few metrics, we might get the impression that Ford is a value stock. But once we dig a little deeper, we find that it is a very real possibility that Ford is a value trap. But before we make that judgment, I think we should take a look at their income statement and their balance sheet next, followed by their overall business. Now, for this being a stock that has been performing so poorly, I was expecting their income statement to look much worse. I'm not saying it's good, it's definitely not as good as I would like it to be, but it's not as absolutely horrendous as I was expecting it to be. So when looking at their annual income statement for the last 4 years, they actually had increased revenue for all 4 years. But the problem is that their cost of revenue outpaced that by an even higher rate, bringing their gross profit to a decline for the past 3 years. That's definitely a concern. And while their net income is certainly positive by billions of dollars, it has been up and down quite a bit, leaving me with an uneasy feeling about their operations. Now, it climbed in 2015, sunk down in 2016, and then climbed back up in 2017, but it still wasn't a whole lot higher than their numbers in 2015. Now, when looking at their balance sheet, I would say that it's okay, but it's certainly not great. They have more assets than liabilities, but their ratio is still pretty close to a 1-to-1, and even their current ratio is also looking pretty close to a 1-to-1 ratio. So it's not like you're picking up a really cheap stock with an amazing balance sheet. It's fine for now. They do certainly have a lot of cash, but they also have a lot of liabilities. And come recession time, this isn't the type of balance sheet that I think you can really fall back on. Okay, so far I'm starting to feel like Ford might be a value trap, but I think it's one thing to look at just their numbers and valuation and metrics, and it's something different to look at their overall business. If you want the stock to recover and turn around, it's got to start with the business. They need to be doing things to turn the business around and improve. Okay, so let's start with why Ford has been struggling so much. Now, it really comes down to a few different things. Not only are Ford's operating costs and expenses too high, but restructuring plans are expected to cost them billions of dollars more, and those problems are much worse overseas, where sales have been declining primarily in the world's largest auto market, China, and the effect is hurting the company's margins even more. And through all of this, investors have really lost confidence in Ford's management. In fact, let's take a look at some of their numbers. Now, when looking at their latest quarter, net income dropped by a whopping 48% year over year. And then US auto sales were down 3.1% year over year. And while that doesn't seem like a huge number, it's still more than double what Edmunds analysts were expecting. And on top of that, Ford's newest restructuring plan is expected to cost a massive $11 billion, and management hasn't really given too many details on how they're going to be spending that money. Now, Ford is currently expected to continue cutting passenger vehicles in favor of better selling and more profitable vehicles like their SUVs and especially their trucks, which have been doing very well in the US, especially thanks to their F-Series. And while those changes would certainly help in the US, they may not be so impactful overseas, and they'll have to have a different strategy. In fact, their Asia Pacific region saw revenues decrease by over $1 billion, with a pre-tax loss of almost $400 million, because practically any vehicle with a Ford symbol on it just isn't performing well in that region. So clearly whatever Ford is doing in China just isn't working. And with higher tariffs and growing trade war tensions, Ford was forced to lower guidance and cited that they expect a significant loss for the year in Asia. But having said that, because China continues to try to find ways to cut on their pollution, Ford is focusing on releasing more electric vehicles and refreshing their product lineup with 50 new models by 2025 and an expectation of raising revenues by 50% by that time as well, along with a 60% product refresh in 2020 or by 2020. And when looking at that 2025 plan, they're planning on releasing at least 15 brand new electric vehicles from Ford and Lincoln, which, by the way, Lincoln is actually performing a little bit better than Ford in that region. And then you look at their performance in Europe, and they actually saw revenues increase by around $500 million thanks to the popularity of the Ford Fiesta in that region. But they still saw a pre-tax loss of $73 million for the quarter. So clearly they need to find a way to improve margins and cut on costs. In fact, Ford is aiming to cut around $25.5 billion in costs by 2022, and with the autonomous vehicle market expected to bring enormous opportunities, Ford is aiming to get their driverless vehicle out by 2021. But the problem is that by 2021, Ford might already be years behind some of their competition. Waymo is trying to get their commercial autonomous vehicles in use by 2019. GM, General Motors, which is actually a very big competitor to Ford, is looking to start mass production of their autonomous vehicles also in 2019. And then Tesla continues to push out updates, improving their self-driving features in their software. So all of that just isn't great news for Ford. Now, one last thing that I do want to mention is dividends, because a lot of investors feel that Ford is a value stock because they're trading at a very low price with some very good dividends. So let's take a look at their dividends. Now, thanks to their stock being so low, they currently have a very high yield, a pretty decent yield here of over 6%. And while some analysts are predicting that those dividends will be cut lower because they're not very sustainable, I think that their cash balance and their reasonable payout ratio at under 50% should hopefully keep those dividends intact, at least for the time being, and hopefully until Ford can start to turn their business around. And even Ford's CFO, their chief financial officer, basically said the same thing, saying the regular dividend is not at risk, and all those commentaries are all baseless. So he's not really expecting them to have to cut those dividends anytime soon. So in conclusion, I definitely do think that there is some value here. You're talking about a very well-known automaker trading at a very low share price, which hopefully bottoms out soon, that pays out a very nice dividend. But what really matters is whether or not they can turn their business around, and especially overseas. But with their upcoming refresh product lineup, with more electric vehicles where those matter, and more SUVs and trucks where those matter, I think that Ford is probably in a decent position to at least attempt to turn things around. But in my personal opinion, and this is just my opinion, I would be leaning on the side more of saying that this is a value trap. And the reason why I think that is because I am not convinced that the stock has bottomed out yet. Yes, Ford is taking the necessary actions to turn the company around, but I think that it's going to take time. You know, I feel like investors are just so impatient sometimes. They just want to jump into a stock And I just feel like you should be a little more cautious in that, because there's great stocks out there. You don't have to rush into a stock that is a little risky just because it's at a pretty low share price. It could actually drop a little bit lower. And the argument that I often hear from bulls is that they can easily fix, bulls of Ford, is that they can easily fix these problems overseas. And if they can't fix them, then they can just get rid of those segments. They can sell off those parts of their business and things like that. But you got to remember, China is like one of the biggest, most important automobile markets out there. And if you're already struggling there, and with higher tariffs and the whole trade war tensions are forcing you to lower guidance, that's not a good thing, and it's going to take time to fix those issues. So ultimately, whatever decision you make is yours to make, but in my opinion, I would rather be a little more cautious with my money. I think that there's better stocks out there that are just so much safer. And when it really comes down to it, here's the way I feel about these type of stocks that go down a massive amount, and then people argue whether they're value traps or whether they're value stocks or value traps. And we've had similar discussions with like General Electric because their stock was down so much. But the thing is that I just don't see these businesses turning around so quickly, just magically recovering overnight. I feel like it's going to take so much time to fix these issues. A lot of these problems are multi-year fixes. So I think that once they start to turn things around, people will see that. I mean, analysts are not dumb. Investors are not dumb. They're going to see that. So once they start to turn things around, the stock will start to recover. It'll bottom out and it'll start to recover. And once that stock starts to recover, I'd rather jump in there once it's trending upward instead of jumping in when it's trending downward and could potentially drop lower. Has it bottomed out? Maybe. Maybe it has bottomed out, and maybe it's going to start recovering soon just because it's at such a low share price. But I'd rather wait for their business to improve. This isn't right now, for all the issues that they have, this is not a company that I feel comfortable investing in long term. And if I don't feel comfortable investing in them long term, then I run the risk of their stock dropping lower and then wondering what to do with my money. Should I stay in? Should I jump out? I'd rather have some confidence long term. And in order for me to get that confidence, I need to see them turn things around and start to recover. So that's where I'll be jumping into Ford stock. But that's just my opinion. I could be completely wrong, and many times I am completely wrong, and you guys definitely let me know when I am. So anyway, that's just my opinion. Thank you so much for watching. That's all I got for you guys today. If you enjoyed this video, please take just 1 second out of your time, hit the like button. It helps me out so much more than you could ever know, and it really means a lot to me. But thank you guys. I hope you have a wonderful, beautiful day. Good luck with all your investments. Let me know what you're doing out there in the stock market, and I will catch you guys later. Have a wonderful, beautiful day, and take care. Bye-bye.